Hi, good morning, Anuj. Good morning, Prashant. And second day running, right? That the markets closed in the red on Wall Street, that is. So the Dow was down almost 200 points. Also, the crude market has come back into action. Crude moved up 4% yesterday. Brent is back above $104 a barrel now. There are prospects of that OPEC plus supply cut coming through. So that seems to be a bit of a bother on the sidelines. FI sold yesterday about 560 odd crores, while DIS bought about 150 crores. But the important bit is that the market is still well off their June lows. So if you look at the US markets, it's well above the lows that we saw in the month of June. The S&P 500 is 10% up from June. Nasdaq is up about 13%. So this is still an uptrending market, perhaps just, seeing a bit of a pause right now. For our own markets, a lot of stocks in focus yesterday. The IT stocks were under a lot of pressure, but the ones that outperformed were the auto stocks. The sales are due on Thursday, which is the 1st of September. And you had Maruti, M&M, Hero all outperforming the markets yesterday. So let's see whether there's any follow-through buying there. But Anuj, for the market itself, as I was saying, the US markets are still about 10-12% up from June lows. So is it that despite this choppiness that we're seeing, despite the volatility, one shouldn't worry too much about the long-term trend?
Yeah, Sonia, when the series started, there's a point I made that, when you have 5-week series, and September normally is a brutal month for option writers. So, you see this kind of a trend. The other point, I don't know if you remember, when in the last Editors Roundtable, we discussed the record bets on the US market, the short bets on the US market. And the big Q will come from US, like you pointed out. And over there, the number that was there was $107 billion. I mean, that's the huge amount of shorts which were sitting on S&P 500. And the question we asked was that, did these hedge funds know more than we did? And obviously, we now have the answer, right? With the kind of decline that we've seen post-Jackson Hole. The big question is, do these shorts run or cover? Because, in that lies the answer to your question on whether, the market, revisits the June lows or, it does not. Because the classical indicator is that you run your short, you run your profits, but this is a huge amount of short position. So if the market turns, then the short covering can be equally big. So I think it makes for a fascinating month of September. For our market, I think it was resilient. The texture is turning weak though, but the market closed nowhere near the lows. I think that's something that the bulls would like. What it does is it makes yesterday's low sacrosanct, 17,166. And 17,250 in the past has been a very strong sort of support, and the market managed to close above that. So that zone of 17,150 to 17,250 now becomes important. In terms of the moving averages, the big one to watch is the 200-day simple moving average, which is at 16,975, roughly at 17,000. As long as it's above that, the texture is still positive. But then, let's see how things turn out. The other point is that clearly IT is showing signs of revisiting its lows. The Nifty may not do that. But if you look at this month, the IT index is down 5%. And that sort of has negated any move because of the Bank Nifty, which is up about 2%. So if the IT index has to revisit 52-week lows, which is possible, we're just about 5 or 6% off that, I think then the market could have a bit of a problem. The other issue would be what happens to the broader market, because even in the decline, the broader market has remained very strong. In fact, this month, the mid-cap index is up 4%, while the Nifty is up only 0.9%. So let's see which way things turn, because I think in that you will get an answer in the market breadth. If it starts to weaken, then perhaps we also revisit the lows. But otherwise, maybe the market could dodge another bullet and move on. Prashant, hi, morning.
Good morning, Anuj. Morning, Sonia. No, absolutely. And I think I want to start with what you mentioned, the fact that yesterday the Nifty was down 200 points, but it was still about 160 odd points off the day's lowest point yesterday. So, and just think about it, right? Friday, we had that very large correction in US markets. Just try to reimagine the sentiment that was there circulating over the weekend, right? Absolutely bearish, extreme bearishness. And what did we see on Monday? I mean, sure, the market was down 200, as I said, but it was also up 160, 170 from the lows of the day. So there was no collapse. Broader markets did well, mid-caps and small caps. Advanced decline was 1:2 in favor of declines. But when we began the day in the morning, it was some 8:1, 1:8. So, I mean, the fact is that the market, held on. It was down, but not out. And that's significant in the face of the very negative cues and just sentiment over the weekend. Last night, Wall Street has been, very, very orderly. It did sell off in the last 30 minutes, but compared to Friday's disorderly kind of, complete sell-off, last night was okay. I mean, it was nothing, half a percent, 1%, 1.25%, those kind of cuts as far as indices are concerned. Oil is perhaps coming back up a little bit, and I think this needs watching, because this is maybe after what happens broadly in terms of risk aversion or risk on, oil can set the mood for a very large importer like India. It's creeping back up at about $105. What will OPEC do? They've been making noises that they want to cut output. We heard comments earlier from the Saudi Arabia energy minister. Will they do it? Will it push prices even higher? Some believe that, and people in this show, energy market experts in this show earlier over the last 5 days have said oil perhaps heads back to $115, $116 a barrel. So be mindful of that. The other thing is Europe, right? I mean, absolute complete mess. We're seeing power cuts. We're seeing gas prices. Gas prices, by the way, cooled off a little bit. They can't go, I mean, they're already $1,000 a megawatt. So, but point is, it's a mess out there. And in the midst of all of it, what is also happening is that expectations of what the ECB will do is creeped up significantly. From last Thursday, the European Union 2-year front-end rates have moved up almost 25 basis points. And now, in September, in terms of what markets are pricing in, it's almost equal from both the Fed and the ECB. Some 50 or 65% probability of a 75 basis point hike, both from the Fed and the ECB. I mean, who would have thought? But that is where we are at. So there is tightening happening, which I think, and those expectations are getting entrenched once again. Sonia.
Absolutely. And, I take your point about what's happening in Europe. It's quite scary, right? I mean, Russia has drastically cut natural gas supplies to Europe. A lot of people are now calling it fuel poverty that most of Europe is facing, and perhaps Europe could head into recession as well. We spoke to a lot of companies that have exposure in Europe, and they said it's only gotten worse. So for our own markets, I think what the street is doing is looking inwards. So yesterday as well, you not only saw auto stocks see buying action, consumption names, right? Yeah. Whether it was the Asian Paints of the world, Nestle, a lot of these names were the stocks in the green. Britannia was the biggest Nifty gainer. So, well, perhaps that could be the order of the next few days as well.
That reminds me of 2003 to 4 phase as well. Almost same thing was happening, Sonia. All the, in that phase, IT stocks were down 30 to 40%, and the banking stocks and auto names were up 40 to 60%. I mean, that did happen. So maybe early signs of that are visible here.
Okay, well, on that note, let's kickstart the show. We have lots to talk about in the next 2.5 hours. On the equity side, Rupal Agarwal of Bernstein says that they have been looking for cues to become more